are actually going to, the recording is in progress. So just to let you know that the recording will be shared following the event on the Financial Inclusion Commission website. So everybody will have access to the full recording of this event today. We are going to also have some polls, poll questions, which we'd all like you to join in with, you know, a little bit of participation. And then we'll be sharing the results of those polls as well. Throughout the session, we will be having Q&As. And when we come to the Q&A sessions, because there's going to be a couple of screens of us on here today, it's always best not to just fling your arms about because we might not see you. So on the bottom of your screen, you'll see the word reactions, which will give you a little hand that you can use. Failing that, you can actually use at the bottom of the participants list, you'll also see a blue hand, which is also a hand which you can just select, and then it will come up on the screen, and then me and one of the team will call you in accordingly so that then you can obviously join in with the conversation. Apart from that, I think I've covered most of the things. Chris, I want to pass over to you now to start the session.
Right, well, thanks very much, Heidi. And we do have to pay tribute to Heidi Oliver, who you've just heard from, who hosts these sessions and has done a tremendous job, especially given that we've got well over 100 people who've joined us this morning. So welcome to all of you on behalf of the Financial Inclusion Commission, which, as many of you will know, is made up of representatives of consumers and business organisations, policy experts, and parliamentarians from across the political spectrum. Now, the aim of the Commission is to raise the issue of financial exclusion in public and policy debate and to build coalitions of support to build a more inclusive UK in which everyone has access to financial services that meet their needs and which they have the confidence and ability to use. We're supported by Link, Santander and HSBC, but we are wholly independent. Now, my name is Chris Bond and I chair the Commission. I'm also honoured to chair the Lending Standards Board and the Equity Release Council Standards Board, and to be a trustee of the Money and Mental Health Policy Institute. I'm pleased that all those organisations are represented here this morning. Now, we'll be hearing from two of our commissioners, John Godfrey and Martin Coppack, representing business and consumers respectively, later this morning, together with Joanna Elson, who arguably has a foot in both camps, is it fair to say, Joanna, as CEO of the Money Advice Trust and as a board member of UK Finance, focusing on consumers and vulnerability. And of course, we'll be hearing in a moment a keynote speech from Sheldon Mills, Executive Director of Consumers in Competition with the FCA. Now, those are the names on the programme, but amongst 100 or more people who've joined us this morning, I can see that we have a wealth of expertise on the issues we'll be discussing, and we had an opportunity for a bit of networking in advance. My apologies if some of you were not on my screen and I didn't welcome you when you joined. But because of that wealth of expertise, I do hope that you won't be shy in making a contribution either during the Q&A following Sheldon's speech or following the panel discussion later. Now, our discussions couldn't be more timely, could they? Given the cost of living crisis is so quickly eroding the living standards of so many families, especially the 14.2 million who have low financial resilience. And while the headline rate of inflation is 9 or 10%, that measures the changes in prices affecting a household with a pattern of spending about 3/4 of the way up the income scale. For the poorest, whose budgets consist disproportionately of those essential items rising fastest in price, food and energy in particular, the rate of inflation is much higher. And for those facing financial exclusion, there's an extra twist in the stranglehold of living standards, the poverty premium. The extra costs of insurance for those living in poorer areas or suffering a disability, the extra costs of being unable to buy online, the need to turn to costlier forms of credit. Now, these extra costs erode the living standards of the excluded by an estimated further £490 a year. And that's a lot when you're already close to the edge. Consumer and debtor organisations are working hard to address the effects, and government has come forward with policy measures. But the question for us this morning is what can be achieved through regulation, especially in the context of the review of financial regulation now underway. What role can the FCA play in addressing exclusion? So I'm delighted to welcome Sheldon Mills, as I said, Executive Director at the FCA with a responsibility for consumers in competition, who I know is passionate about tackling vulnerability and consumer detriment. But before we turn to you, Sheldon, I'm going to ask Heidi if we can just do a quick poll to see where people stand at the beginning of this discussion, and then see whether the dial moves during our discussions. So the question is, does regulation have a part to play in extending access to financial services? You only have one. This is not multiple choice. You only have one. So if you'd like to click, and let's see what the results are.
Fingers on the buzzers. Okay, just a few more. Okay, everybody click their buttons. There's a couple that hasn't, but we'll leave it at that, I think, and I will share it with you now. There you go.
Okay, you've got 5% who don't know, Sheldon. So there's your challenge. But thanks very much for that. 95% think that regulation does have a part to play in extending access to financial services. What I should say, Sheldon, before I hand over to you, is that we do want to pay tribute to all the work the FCA has done in extending access already. And the question is there more that could be done? And is there a legal framework within which that should happen? So shut up from me. You all want to hear from Sheldon. Thanks very much for joining us, and over to you.
Chris, thank you very much. And thank you very much to the Financial Inclusion Commission for organising this conference and all the work that you do to support people up and down the country, particularly as we move, as you say, into a time, well, it feels like a campaign, basically, of crisis after crisis, but a significant economic crisis with supply chain issues, the war in Ukraine and Russia, and rising costs and costs of borrowing for people around the country. According to the Inclusion Foundation, 1 in 4 adults in the UK will experience financial exclusion at least once in their lives. And there are 13.4 million people on relative low incomes in the UK after housing costs. And our Financial Lives survey shows that in 2020, 10.7 million adults had low financial resilience, and 24 million demonstrated one or more characteristics of vulnerability. That's a lot of people who we know may well have issues with financial inclusion, might be excluded from access to financial services, or when they do access financial services, the cost of those might be expensive, particularly given their relative incomes. And we've seen the COVID-19 pandemic and the ongoing cost of living crisis throwing into stark relief the importance of basic financial services to households up and down the country. So just imagine in the depths of lockdown with no access to a bank account. You can't get essential groceries as the nearest shop is only accepting card payments. You can't access the alternative options and prices online, which might be better value during that period, or might allow you to get your groceries delivered to you. You keep your money in the house in the biscuit tin, with value being eroded by inflation. And then someone breaks into your home when you're out for your daily walk and the money is gone. You don't have any insurance because you don't purchase or you can't afford insurance products. So you can see just from that hypothetical that financial inclusion is a critical issue, and one which, as a regulator, we think that financial regulation has an important role to play in driving financial inclusion. That's set out, in a sense, in our FCA strategy, which we published last month. It includes 4 top-line outcomes that we want to drive throughout all our work, and one of those is access. It's one of the key outcomes we seek to achieve across the markets we regulate. However, to tackle financial exclusion and the related poverty premium, let's be clear that exists, we need to work together across government, regulators, industry, and consumer groups, because financial regulation can't tackle this issue alone, but it does have an important role to play. So I was going to talk a little bit about essential financial services for all, as I describe it, and then a little bit about my own musings on how one can tackle financial inclusion. And if I have time, I'll cover off the point on the current parliamentary discussion about a have regard for financial inclusion, and then say a little few words on the FCA's work on the cost of living crisis. But let's see how we go, Chris. My speech will be published, so you can tell me when to stop and move to questions if I don't get through it all. So what's the definition of financial inclusion? I know we often talk about the term, and it's important to think about the definition. Well, the government's definition is individuals, regardless of their background or income, having access to useful and affordable financial products and services. And I think while the UK's financial services industry, which we regulate, is vibrant, it's competitive, it offers choice, there's some great products and services out there, it is worrying that there remain some people in the country who do not have access to some of those fantastic products and services. And that should be a worry and something that we should seek to tackle. And just taking some of those examples, this audience will know them well, but it's just worth focusing on them a little bit. Bank accounts, you need a current or checking account to deposit money, your wages or other income, and then to use that to transact with others or pay your bills, including energy, utilities, water, food, etc. And yet in 2020, 1.2 million UK adults had no current account or e-money account of any sort. It's a global problem. We often talk about the UK, but I think we should talk about the world in one sense. 1/3 of the adult population worldwide, that's 1.7 billion people, still unbanked in 2017, according to the World Bank. Affordable credit, really important for many families and individuals, enabling them to buy goods and services, spread repayments over time, manage shortages. And we've seen through our work on high cost credit and affordable lending, that households struggle to access credit at high prices. Insurance helps ensure people can withstand financial shocks when things go wrong, but 1 in 10 adults in the UK don't have an insurance product. And more importantly, in a sense, low-income households are less insured, and when they do have insurance, they pay higher premiums or face more costly monthly payments. In addition, savings, pensions, and investments, if you have any spare money, are important for saving for key life events, buying a house, retirement, later life care, and so on. And accessing good advice and fair value on these products is essential. These are all areas where we have done work and where we have research and activity in order to tackle issues for customers, including, we hope, impacting on financial inclusion. So how do we tackle financial inclusion issues? Well, my view is that it will require multiple actors, initiatives, and innovation to tackle it. And I've got a few themes which I'll run through very briefly. The first is data insights and empathy. I think data and insights are key to understanding the lived experiences of different communities in accessing financial services. Our Financial Lives Survey is a nationally representative survey of UK consumers. It's a rich source of intelligence which we share that helps us identify harms and improve consumer outcomes. On financial inclusion, it does provide data on the characteristics of vulnerability, including poor health, a life event, low resilience, or low capability. And that then allows us to find correlations with income levels, social deprivation, and diversity characteristics. And that's my point here. Qualitative and quantitative information are really important for understanding financial inclusion. And empathy, a pretty underused word, I'd imagine, for a regulator, is key. Because some of the challenges people face might be unknown or new to us. In the pandemic, we added survey questions to our Financial Lives survey on young people and ethnic minorities. I was quite surprised they weren't there already, but anyway, there we go. We added them because we could see that the way the pandemic was impacting those communities was qualitatively different to others. And then the quantitative insights from our survey and other data showed that empathetic reaction was grounded in data. So it's really important, I think, to underpin policy to match qualitative and quantitative insights. And that will enable both people to gather round and actually do policy in this area, and it be supported and reaching to the right people. Education and financial capability. In 2020, 1 in 5 UK adults reported having low financial capability, low confidence or knowledge in managing financial matters, or poor or non-existent digital skills, the so-called digitally excluded. And statistics show that 9 million people in the UK can't use the internet without help, and 11.7 million people lack the essential digital skills for everyday life. 1 in 6 adults, 16% with low capability, they say they've fallen into debt, which might have been avoidable if they had understood their options better. So there are real challenging and stubbornly sticky issues in this space that need tackling. And we at the FCA want to see certainly the consumer journeys that firms apply to new and existing customers are clear, transparent, and accessible to all consumers, including those with characteristics of vulnerability. And our proposed new consumer duty, which will ask firms to place consumers at the heart of the work that they do, should help support our work in this space. We also work with the Money and Pensions Advice Service, which has a role in providing advice and support to consumers. The third area, I think, is how do you invest in basic or essential services? And our role, our function, and we can discuss this in questions, is to make markets work well. And it's quite clear to me from my experience of many years working in the competition field, is that markets sometimes work really well and sometimes they don't work very well at all. They fail due to supply problems, investment might dry up, risk tolerances change, business models change, etc., or demand problems. People stop purchasing certain types of products in great numbers. Access to cash is an issue in terms of a demand problem, and then changes in terms of the supply side for the way that firms want to deliver those services. And when that happens, there are choices for government, policymakers and regulators to think about the conditions for the supply of those basic or essential services, if those are seen as a general public good or necessity. So, for example, major financial inclusion legislative initiatives in the past to tackle certain issues have included basic bank accounts, auto-enrollment in pensions, and the proposed protection of access to cash, which was set out in the recent Queen's speech. And those are or will be impactful. 7.2 million basic bank accounts open as of last year. 10 million people have a pension in accumulation. And we believe that a good 10 million people have benefited from auto-enrollment. And 5.4 million people rely on cash to a great extent. So hopefully will be supported through the powers that the FCA will get through the access to cash legislation. And it's not just legislation which can do this. Our role as a regulator can also support inclusion. And I point to 3 areas where we've certainly contributed towards that. One is our general insurance pricing practices work to remove the loyalty penalty in insurance. Effectively, that's a redistribution measure that those who are really, really benefiting from shopping around were being supported by people who were sticking on insurance premiums, sometimes being price walked 10 years, almost a decade. And there's something around the fairness of that. And it's a shame that we had to remove that loyalty penalty to tackle that, but that's something which we had to do. Our price cap for high cost short-term credit, which is expected to save consumers with low financial resilience £150 million per year. And then our intervention in travel insurance, which helps consumers with pre-existing medical conditions such as cancer access affordable cover. That, having suffered from cancer myself, that is one when I went to get travel insurance that I turned to. That was before I joined the FCA, and it was extremely helpful. Innovation can really support financial inclusion, and we shouldn't be afraid of innovation and to use innovation in order to support financial inclusion. We've seen a range of financial inclusion style products aimed at lower income households or people who struggle with budgeting or managing their money come through our regulatory sandbox and our innovation pathways programs. And those include initiatives to provide free cash withdrawal over the counter in local shops and basic bank accounts for the homeless to receive salaries and save. We've supported the development and growth of the payments and e-money sector, and e-money accounts which hold money in electronic form are used by 2 million people in the UK as of 2020 and are popular among younger people and people with characteristics of vulnerability. They do come with certain risks and they're not really a substitute for a current account, but it is important that people have some mechanism to pay for their goods and services. I think one of the biggest challenges reaching the financially excluded, and it'd be great to get to the conversation with many of you here because you work in this space, is how do you reach people in certain communities? And I think it's important to sort of seek to find regulatory and policy initiatives which enable the growth and breadth of different distribution networks to support take-up or provision of services to the financially excluded. So service providers in adjacent markets can support financial inclusion. For example, social housing landlords might help tenants with affordable credit, insurance, purchasing key appliances, and even banking facilities. And you can do that in partnership with a financial institution, such as a credit union, or with a retailer. And that form of partnership obviously can give tenants fairer access to essential financial services, can lower costs, and more importantly, navigate some of the barriers and frictions around accessing financial services, which may be caused by low financial resilience, health, or other capability issues. And our guidance on helping tenants find alternatives to high cost credit, which we produced in 2018, has supported some of these initiatives. But I do think there's more that the FCA can do in that space to understand some of those partnerships and see how our rules work around that, also working with government in relation to that. Finally, data and technology have a key role to play. If we look beyond the UK, the rise of smartphones and secure payments has helped support rural and urban communities worldwide, where no bank has ever opened a branch or institutional footprint. Not just payments either. If you look at micro-insurance initiatives, which help people on low incomes ensure their livelihoods, crop or health or natural disaster or burial insurance and so on. It's technology really which is helping to drive support financial inclusion and economic growth and empowerment in those communities. And I think there's something that we can also learn from those experiences. Dare I say that we learn from from the developing world to the developed world, but hopefully I think we can. In the UK, there are opportunities with open banking. That was a remedy from the CMA's study into competition in retail banking, and that has enabled innovative products and services to support widening access to financial services. That comes with risks. There are clear risks around the use of data in relation to personalization, algorithmic discrimination, and exclusion. I sit here, I'm a black gay man. Believe me, I understand about algorithmic discrimination, but I also know that sharing data in safe and ethical, sensible frameworks, which I wish to participate in developing through our work on open banking and open finance, can remove barriers or frictions and enhance financial inclusion. Issues like digital ID, budgeting and planning tools, pre-populated debt advice journeys, work on thin credit files. These are all areas which, through open banking or through the use of data, we can really get to tackle some tricky financial inclusion issues. I wanted to turn briefly to the rising costs and rising borrowings, the cost of living crisis. And that's going to present real challenges to all our efforts to improve financial inclusion. It was interesting developing this speech at this time. If I developed it 3 or 4 months ago, when I think we planned to meet, it'd be a different speech in some senses, because right now the price of food, basic necessities, energy, utilities are going through the roof, and real wages due to inflation are falling. Savings are being eroded in real terms, and it's a perfect storm. And I think that will take its time to work its way through the economy, but the squeeze on household finances will really push more people into vulnerability, and the risk of financial inclusion are set to intensify. I couldn't say anything other than that. What are we doing at the FCA? We're preparing for those risks, establishing our scenario analysis of different potential future economic environments, also working with the Bank of England on that, including a stagflation scenario with more persistent inflation. And we know that the impacts of these risks won't be distributed evenly. Households on higher income will likely be cushioned from the impacts, certainly in the first 6 to 12 months. If it goes on, we don't know where that will go. Whereas a number of households will experience a squeeze on their finances, and a few of them will be struggling. We call that the cushioned, the squeezed, and the struggling. And we use those 3 broad-based scenarios in order to think about our work. We see that the Institute of Fiscal Studies estimates that the poorest households may face average inflation rates of as high as 14%. And then that's compared to our cushion group, the richest households, of 8%. So it's quite clear that this will have a greater effect on people who we're talking about here, who face already into financial inclusion issues or higher costs for accessing financial services, it will impact them more. I think we'll be looking at two particular issues. The first is credit. That's a useful tool for individuals to smoothen outgoings and weather temporary income shocks. But it does come with a sting in the tail that greater indebtedness can lead to greater problems, mental health issues, and so on and so forth, and difficulty. And I think the availability and affordability of credit will continue, sadly, to become a challenge for struggling individuals. Whilst we haven't seen major growth in borrowing, credit card borrowing grew by 10.6% over the past year, and other forms of consumer credit grew by 3%. I'm not sure if BNPL is in that, however. It is important that net borrowing of consumer credit by individuals amounts to £1.3 billion in March, and that's higher than the 12-month pre-pandemic average up to February 2020 of £1 billion. So it's starting to increase, and I think it will increase more. For those in financial difficulty, it's going to be really important to ensure that we have the right level of debt advice, that we have the right training and skills for that it's available in the right spaces and communities, not just digital, that it's physical, that people can access it. And in addition, our work with firms can ensure that the journey through debt is fair, reasonable, and accessible. And we're working on firms to ensure that that's there, including forbearance in some instances. We've already warned, I've sent a Dear CEO letter to, I think, 30,000 lenders, I was told, hopefully not with postage stamps. We've already warned that the consumer credit sector needs to ensure that it's not doing misleading advertising and exploiting this cost of living crisis to promote their services. Pre-approved credit cards, pay your energy bills at 600% APR. I mean, if you see some of the adverts that we collect and see, you would be shocked that people could even think that they could write this stuff down. Anyway, we will be tackling and enforcing against that. We want firms to provide credit, but they need to do that in a way that it's affordable and it's in the customer's best interest. And then finally, through the cost of living crisis, people need to start preparing for the future in an uncertain economic climate. And that really doubles down for people with financial inclusion issues. It was already difficult to plan for them on their incomes. It now becomes increasingly more difficult. I think consumers are already making those really painful trade-offs between managing your immediate needs today in terms of paying the bills, putting food on the table, saving sometimes for a rainy day, and then planning for tomorrow, for your family's future. And that will hit financial services in different ways. Some may decide not to take out insurance. Some may cancel existing policies or reduce their cover. Some will work back, if they ever had any additional income, to cut back on savings. And retirees may draw down on funds more quickly or make different choices. High inflation means that consumers are losing money in real terms. One area where we will be monitoring is the Bank of England has raised the base rate from 0.25% to 1% over quite a short period. And some people are saving. And it's really important that we see deposit takers pass on those increases to consumers quickly and do that. We're seeing increasing disparity between the bank's base rate and the average variable cash ISA rates offered by the 6 largest high street banks and building societies. It was 0.2% at the beginning of the year. It's now around 0.75% last week. I watched these charts, probably far too much. But we also want to see savers treated fairly. And so we expect firms to explain any decision they take on the savings rates to us and to their customers. I think, as you can see, people are going through tough times. We've seen that and we know that. And I think I'll finally say that I think it's important that everyone comes together to find ways to support each other. And I applaud the Chancellor's announcement in terms of the benefit that they're giving in terms of energy costs. I think it's important that we continue to see how we can support society through these difficult issues. The FCA will play its role on that. We'll continue to work through the Financial Inclusion Policy Forum with John Glenn. And I believe that our new FCA strategy and proposals for our new consumer duty, as well as our work on the cost of living crisis, will continue to support ensuring that there are affordable financial services for all. Thank you.
Well, thanks, Sheldon, for a really thoughtful and comprehensive speech there. It's absolutely clear that you are determined to do what you can to challenge detriment and disadvantage, and we certainly applaud you for that. You did mention the role of innovation, and I should flag the fact that this morning also the Inclusion Foundation, which you mentioned at the outset, has published an ebook, which it'd be worth Googling and seeing what they have to say about the role of fintech in particular in addressing some of these issues. Let me throw it open to those who've joined us today, and I'm going to check how I can find out who it is, given I've only got a third of the screen at a time, so many of you. But questions, comments to Sheldon? Who's going to come in first?
And please, if you can use your raised hands, that will be easier for us to see. So your raised hand is under the reactions button or at the bottom of the participants list. Raise hand or pop it in the chat.
Right, Alison from Crown Savers Credit Union.
You're on mute, Alison. Okay.
You hear me now? Yes. Yes.
Yep.
Having, as sort of Chris will know, been a development agency setting up credit unions, 20 plus years ago, and having now sort of gone into another second credit union, having established one over 20 years, that the support for this vital form of affordable credit, where in the best instance, there is money advice, budgeting support available, and certainly the ability to change tack, as we are at the moment, being far more careful in this current climate about how we lend and whether it's actually affordable, but not only affordable now, realizing that people borrowing from us now, the chances are their income is going to drop, and taking that into account as well, and dealing with individual people, and also that being that sort of affordable credit being accessible to in every community, with it face to face if need be, but using the digital to make it a lot more efficient and effective. And I think the regulators have been, rather more the PRA as the main regulators, have been quite draconian, and I think admit themselves that newer credit unions are closed quite quickly from their figures, and it's a matter of how these can be supported. I think I had an early day motion put in by Sir David Ames in 2006. I also had a proposal go to the Treasury then and submitted a lot of information to them on financial inclusion. It's a matter of, why has this not expanded as we see it in other countries? In this country, they have been very poorly supported.
Thanks, Alison. Sheldon, do you want to respond to that?
Yes, yeah, of course. Thank you, Alison, and lovely to meet you. So I think there's a need, and I've thought this for quite some time, to really look at the way in which credit unions are funded, the amount of capital available to credit unions, the activities that credit unions can carry out, the breadth of those and the flexibility of those. There are some restrictions around the way in which credit unions operate, which I find puzzling. And I probably shouldn't say that publicly. And I think so. So I think there is work to do in relation to the credit union sector. I had the privilege to go to Building Society Association and meet with some credit unions in Liverpool, and I was taken with one of my parts of my speech was on data and insights and empathy, and I was taken with the level of understanding of communities and people that I sometimes don't see in conversations with other financial services sector leaders. I also have seen some of the activity of credit unions in the United States and some of the regulatory frameworks there, which enable a clearer set of rules around ensuring that communities are served with basic financial services. So I do think there is work to do in relation to the credit union sector to support it to grow and serve certain communities. I think that, and building societies as well. And I think that's especially important as we see some of the retrenchment by the major retail banks in terms of their physical presence in communities. And some of the issues and challenges in certain communities require some deep and difficult conversation or understanding in order to get over some of those financial inclusion access issues. So I fully applaud, work on credit unions, and I take your point in relation to the bank or the PRA. They are thoughtful on this. Their role, however, and their objectives are pretty clear in terms of safety and soundness of the financial system.
Yes, I think the fact that credit unions, probably more than anyone else, know their members, and so they've got that insight into long established relationships with many of them, and what's gone on and where they're at, and the changes in their circumstances, and that people are quite open with their credit union as to where they're at and the difficulties they're in, and we can then look at their change in circumstances and still help them.
Yes. Hey, thanks, Alison. Now let's turn to Alan from Financial Inclusion Group North Staffordshire, and then to Howard Taylor, who's one of our commissioners. Alan?
Yeah, Sheldon's asked a great question there, amongst many, how to reach people. We've developed a different way of slicing and dicing the cohorts. It came from excellent publications from the Money and Mental Health Institute. So we went to the mental health services in the area and discovered that highly paid, highly skilled mental health professionals spend an inordinate amount of time trying to help people with their finances, which they're probably not qualified to do. We ran a pilot with them. We put 20,000 into the pilot. They saved £43,000 worth of staff time. They're now contracting. The same could go for leavers of childcare systems. Never seen money, never had to pay a bill, never heard the angst, get fed, kept warm, etc. So it works on the basis of where will you find people on Monday morning? It's an old retail adage. And that's where you'll find it. You'll find them in the disability services. You'll find them in places where people have no qualifications. So there's a lot that can be done in that. It's not quick, but once you're into it, it works really well.
Okay, great. Should we just go to a couple of others?
Yeah.
First, Howard Taylor from the Commission.
Sheldon, thanks for your speech and thoughts this morning. Very helpful and insightful. What I'd be curious to know is how do we get the technology infrastructure that you're kind of hinting towards around using technology to solve the problem of exclusion / create greater inclusion, when the cost of that technology remains quite high and prohibitive to many? And do we need some kind of more universal approach to how we put that technology in the hands of those who need it?
Right, and Sarah from Debt Camel, Sarah Williams.
Yeah, thanks. I wanted to pick up on a comment on a very small point from Sheldon's speech, which was what I've seen to be so far the absence of data for a lot of statistics broken down by ethnic minorities. I've been trying for some time to find if there are any statistics regarding credit ratings for ethnic minority groups, and I've been unable to find that. The CRA seemed to say, well, as they don't have to ask for it, it would be intrusive and inappropriate to ask for it. But unless we have data, this is just blind. It is hard to make good policy when you can't actually analyse what the situation is on the ground. So I welcome any extra fact gathering around different minority groups and different people. with different vulnerabilities. And I'd also like to support what Alan said, that getting to the people is key. Debt advisors, face-to-face debt advisors, we know how to get to these people. Sure Start children's centres when they existed, GPs, surgeries, food banks. If we're given the funding and you can recruit the people for good jobs, we can get debt advice to the people who need it, and good quality debt advice. It is the funding that is missing.
Great, thank you. Sheldon, do you want to respond to those?
Yeah, I'll be very brief. So, Alan, thank you very much. I mean, I think it really is important to, as you and Sarah said, is to get to people at the moment when they need you, and they're in a space which is safe, and you have the right people to talk to them. To take Sarah's point first, before going to the technology point, obviously MAPS is responsible for the sort of procurement of debt advice and some of the funding which they've been given there. And so I can't respond in terms of that balance between physical and digital service provision. I would say my personal view is that you do need a balance, that I don't think certain groups can only be served digitally. I do think there is evidence, however, that behaviourally you can get people to think through some of their outgoings in a digital format once they get used to that. But then you usually need to get them sometimes into a physical setting for particularly difficult challenges. But in one sense, there's lots of people on this call, including HMT, and I think we should take away some of those comments and think them through. On technology, infrastructure, it depends what you're talking about, Howard. I mean, there are a few levels which I would think. So one is you need to tackle that issue around digital exclusion. So my points on open banking and data sharing are fine. You know, I can make them, but if there's 1.2 million people who are digitally excluded, then it's not going to help them, is it? So it's a bit trite to say. So there's something about society as a whole getting to that last mile of people and digital exclusion, so that those people aren't further digitally excluded as we innovate around these problems. Again, I'm not copping out, but I'm not responsible for funding for people to get that sort of access. What I am responsible for, though, is through the firms that we regulate. You know, when they're closing branches, we ask them to ensure that they are going out to vulnerable, customers with vulnerable characteristics, which would include the inability to use digital if they're moving to more digital means, and help them with training and support them in relation to that. So we do our bit where we can, where things are changing.
Great, thanks, Sheldon. I think we've got about 5 minutes left. So Sian Williams, one of our commissioners, Vice Chair.
Good morning, and Sheldon, thank you so much. It's really helpful to hear you set out so clearly your thinking. One thing as I was reflecting and listening to you was really kind of hearing about how you're saying we're so dependent on the kind of interconnectivity between different parts of society. So you talked about firms, you talked about the regulator, you talked about government, you talked about civil society, the third sector. And I was really struck by how true that is, and how kind of important the relationships are. So I just wanted to ask very specifically about one thing that I know you've heard us say this before, but it would be really good to kind of get your thoughts today on this issue, which is when we as the third sector are trying to get change happen, we often kind of struggle to get traction with any particular kind of power holder, whether that's the FCA or government. I think, for example, of the work that I've been doing for over a decade now around tackling lack of ID for accessing bank accounts. And obviously the banks will tell us that actually it's the regulator that is setting the regulatory policy around ID, but won't tell the banks what ID is acceptable. And so we kind of get caught in these being pushed from pillar to post. And there's another one that I think is really important to get your view on, which is the relationship between the regulator and the government on thinking about how to solve a problem. And we hear, for example, from the Treasury often around pricing, that pricing is very difficult because you need to have really good data. but they can only get that data from a trusted source, i.e. the FCA. But you can't tackle that because it's a social policy issue. And so as we're trying to tackle those issues, we get, I would say, pushed from pillar to post. It's not anyone's intention that that's happening, but it is the net effect. So I guess I just want to come back to this question that we've been asking, which is around the have regard to. Everything you've set out in your comments today, I absolutely recognise and hear and agree with all of that great work. But none of it for me solves that problem when the FCA can't do it because it's social policy and the government can't do it yet because they don't have the evidence. What on earth do we do? How do we solve that?
Right. Sheldon, if you respond to that before we bring in Teresa.
Of course, yes. So different ways to respond to that. So the first is, I'll hit the have regard right away because I didn't do so in my speech. It is set out in my speech, but I jumped over it in the interest of time, and I knew it would come up in questions. So the first thing I would have to say is that, you know, our statutory objectives and what it looks like is a matter for government and for Parliament, and the FS bill is going through. There's an opportunity to change the structure and the ambit of regulation. That's one of the post-Brexit opportunities. And we welcome the debate in relation to a wide range of issues: financial inclusion at the other end, competitiveness. In terms of our current ability to look at financial inclusion, I think we have an ability to think about financial inclusion and to tackle it where we are regulating firms, where we are looking at markets, and where we're convening people to work with partners. We don't have necessarily ability to, what I'd say, take on pricing issues or tackle other types of issues on the basis of a more social policy type approach. That's a matter for government currently, and something which they should have expertise on, and also have a greater range of tools to tackle those problems. And if we just think about that a little bit, Sean, let's say you have a financial inclusion issue such that supply issues, you know, people have stopped supplying certain types of services to individuals. Let's say credit dried up. It is drying up a bit for 5 million people in the UK, 10 million people in the UK. Let's say dried up, no credit. As a regulator, it becomes difficult for us through commercial firms with shareholders to demand them to serve those 10 million people. So to be honest, it becomes very difficult. What are the policy initiatives that you can have to command a set of institutions which have a certain, you know, approach to their business to supply credit to 10 million people? However, government can think about how you can supply credit to those people if it and Parliament thinks that that is a sensible approach to supporting those individuals and to balancing things with the economy. Now, that doesn't go against what I say in relation to financial inclusion, but I think we have to think practically about what a regulator can do in a space, even with a have regard financial inclusion objective that is proposed. I think our intent and also aspects of our current regulatory system, so in our consumer protection objective and in our competition objective, they do talk about ensuring that differing needs are served by customers, and also they talk about the way in which you service them. So there is a kind of a pointing to access. It's not perfect, but it's there. And I do think our orientation is around, as you know, through our work on the new consumer duty and vulnerability and our top line outcomes, is around ensuring that financial services are available and accessible to as many people as possible. So, I mean, we welcome the debate and we're looking forward to seeing how that debate pans out. We would ask and urge everybody to think about how a regulator with its powers can tackle some of the challenging problems in the financial inclusion space alone. I think it does require a genuine partnership. And Martin, I can see in the sidebar that the Consumer Duty and Vulnerability Guidance will not address pricing and income issues. I mean, I welcome you to come in and speak to that, because as a financial services regulator, we are not, our role is not to, we have no role in terms of the income of the end consumers who are served by the firms that we regulate. We don't design wages, we don't design benefits. We have no role in relation to that. I clearly have my own personal views in relation to that, but as a regulator, I have statutory objectives, and I'm not entirely clear how a financial inclusion objective would give me a role in relation to the income that people have.
Yeah, thanks, Sheldon. And you'll have seen quite a lot in the chat around that.
I always watch that. Yeah.
What we'll do is pass all that back to you, if we may. And there's an invitation to Martin to come in and talk to you about talk some of that through. And the point that we were making through the Financial Inclusion Policy Forum is very clear that you're already doing a lot on access. But as both Martin and I know from our days working in the regulator, there's always the worry that you're going to just step over that line and that you're going to get challenged. And so this is really about making sure that there is a clear statutory, not so much a responsibility as the ability for you to address some of these issues, or to consider in everything you do what the impact will be on exclusion. And Claire Tyler, Baroness Tyler, who's put some stuff in the chat there, has been leading this debate in Parliament. And we may well see some changes in the bill. So it would be good if we could work closely with you to make sure that those make sense. I don't know if you've got a few more minutes, Sheldon, for a couple more questions from the floor.
I have. Yeah, no, I have, and I will stay along to watch the panel in any event. So. Oh,
that's very kind. Thank you. Great, Teresa.
Hi, thank you. I chair a small charity called the Fair Banking Foundation, but I'm also involved with regulation of the energy industry in Northern Ireland, which presents many of the challenges that have just been discussed.
Yeah, you must be busy. You must be busy.
How to survive the current situation, actually, and what's ahead in terms of pricing when there's actually no government to even dish out the bill subsidies that have already been allocated from the UK government. So my question for you was, so Sheldon, it was really useful from the Fair Banking Foundation's perspective to have your speech. So we'll be studying the write-up of that. It's very comprehensive, very helpful. I just sort of come away from it wondering what your top 3 success measures are for the FCA in terms of all of the aspects and initiatives that you described. What are the top 3 things you would hope to see improve as a result of all your work in the different areas?
That's a great question. So we have 13 public commitments. I won't go through all of them. But for me personally, my top priority is the new Consumer Duty. And ensuring that those proposals, that we get to finalise them, which we hope to do in July, and then we get through our implementation period. And they're in part relevant to financial inclusion, in part relevant to every customer of a financial service. But what I want to see from that is a step change in the financial services industry and their support and service of customers. How does that intersect with financial inclusion? Well, I think one of the 4 elements, and this might go to Martin's income points, in the new Consumer Duty is fair value. And what we want to see is a better balance between the cost of providing the service and the value that the customer gets from the service. Now, that doesn't mean that firms can't make profit. We're not in a world where if firms don't make profit, there won't be any services, right? Let's be clear about that. But it does mean that people need to look at each of their target markets and their products and think about the fair value exchange. And that does make you start to think about, well, if this group of customers is having a vastly more expensive experience than this group of customers, and there isn't any justification for that, what's happening? So issues like the cross subsidy and insurance, I think would have been easier tackled through our new consumer duty and expression of that cost to value sort of ratio. Likewise, the issue currently in insurance which I mentioned very briefly, so you probably didn't hear it, but that lower income households, if they have insurance, they pay monthly. That's more costly. Well, wait a minute. I mean, we need to think about that. Is there a genuine reason that needs to be more costly? Is there not, in a technologically driven world, a more efficient way to get that cheaper? And you'll know in the energy space with meters, prepayment meters, and all of those expensive routes through to customers, which we just put up with for a long time and didn't think about the experience of those customers. So there are issues like that, which I hope we'll be able to tackle through the new consumer duty, or the firms will read it and just tackle them themselves. That would be really good, put me out of business. And then I think the other area, which I'm very interested in, which is different to this space, is I co-chair the joint regulatory committee for open banking with the PSR, and I've always been quite committed to technology and innovation and thinking through how we can make safe, ethical, sensible liability frameworks, approaches to open finance and open banking as that moves forward. So that's also a personal top priority for me as well. But there are lots of others.
Great, thanks, Sheldon. Now, this has been a great discussion already, but it does mean we're running a bit over time. Emma, could I ask you, I really want to come to you from Christians Against Poverty, could I ask you whether you could hold on to your question for a short while, because Sheldon has kindly said that he will be with us through the panel discussion, because I'd like to give people a 5-minute break, cameras off, kettles on, before we return for the panel discussion after that, if you're okay with that, Emma, but we'll make sure we bring you in. And can I thank you again, Sheldon, for a tremendous, as I say, really thoughtful and comprehensive speech, which I'm pleased will be published, and I think will really help this debate move further. So let's all have a 5-minute break, and please return here at 10:10, I think we are saying. It's a shorter break than normal, but I'm sure we all want to carry on with this discussion without losing momentum. So thank you all very much, and I'll see you in a few minutes. Right, I think we're probably ready to start again. I'm looking at Heidi to see if she's going to come back on camera and nod at me. But she's not going to, so maybe she's not back either. So we've still got 72 with us. Okay, should we get started again? As I say, we don't want to lose momentum from that earlier really good discussion. We've now got a panel discussion with Joanna, Elson, Martin Coppack and John Godfrey. Now, Joanna, as you'll probably all be aware, is CEO of Money Advice Trust, which runs National Debtline and Business Debtline. She's also Vice Chair of Friends Provident Foundation, and she is a board member of UK Finance with particular responsibility on consumers, in particular vulnerable consumers. So, as I said at the beginning, in a sense, she can see this from both sides, but she's been very prominent in the whole debate about debt, especially in the context of the cost of living crisis. Martin Coppack is one of our financial inclusion commissioners, is director of Fair by Design, and has driven forward the whole debate on the poverty premium, as many of you will be aware. He also worked with me in various roles, both at the FSA and then the FCA, where he was running the work on consumer engagement, and at the Lending Standards Board, where he was Deputy CEO. And then we have John Godfrey, another of our commissioners, who is Corporate Affairs Director of Legal and General, and I think Director of Levelling Up, John is the phrase as well. John has also been the head of the number 10 policy unit under Theresa May. So very distinguished lineup in terms of the panelists. And Sheldon, I'm delighted that you're able to stay with us. And then when we come to the opening of questions, hopefully you'll be able to chip in on those as well. So could we start with Joanna, just to give us a short introduction of where you're coming from on this whole debate, and then we'll go to Martin and then John. Thank you.
Thank you very much. Lovely to see you all. Good morning, everybody. A great discussion already, and several of the points I was going to make have been made, so I will try and weave through interesting new stuff rather than repeat things that have already been said. So really important debate. Thank you to Chris and the Commission and everybody who's put together today. For those of you who don't know me, Chris has given you a very good introduction, and the fact that our locus in running National Debtline and Business Debtline, I think means that we see some of these issues clearly, as many of you do on this call. So as a debt charity, we're acutely aware of how financial exclusion and problem debt are a cause and consequence of each other. And it sounds obvious, but it's worth repeating that without access to services like insurance, savings and affordable credit, financial shocks and life events can quickly spiral into problem debt, particularly in the current climate. We've already heard how difficult that is for people. So just a tiny bit of context. In April, almost 1 in 5 of our callers to National Debtline said that an unexpected bill was the main reason for their financial difficulty. 1 in 7 cited a loss of job or income shock. Also worth saying that we did some research before the current price cap rise in March, so this was national research. 1 in 4 adults in the UK said that they'd used credit to pay for bills or essential services in the previous 3 months. That was before the current rise in the price cap, and obviously we have another one coming. Of course, once you've been in debt, it becomes harder to access the products and services you need, particularly at an affordable price, and then you can get into a vicious circle. And for our clients who are really struggling to get by day to day because their income is simply too low, many have to pay more for credit for products and services that others take for granted. And that's why the work that Martin and others are doing on the poverty premium is so important. It was good to hear Sheldon talk about the really shocking adverts there are out there, which is firms who are basically trying to take advantage of the very difficult and unpleasant situation that people find themselves in to charge them massive amounts for what are essential services, in my view. I think it's fair to say we've seen these issues rise up the political agenda in recent months, and of course that's not a surprise, and that's the right thing. That's led to some important initiatives, and it's good to pay tribute to those who've moved these things forward. I think we can agree there's plenty more to do, but for instance, the Help to Save scheme that there is out there, while it's under promoted, is a useful scheme to help people build up a safety net. The no interest loan scheme pilot has now started. Pleased to see Fair for All Finance on the call. I'm delighted to be a board member of that, and really pleased to see this pilot get underway, because it's going to be really important to see how that pans out and what sort of space that can fill and what gap is left as we look at what's needed here. And as I say, there's much more to do, and that's why it's so important that we're looking at the roles of the various players here. And Sheldon has carefully set out what he thinks the role of the regulator is. Shana's focused on how the players need to work together, and it's kind of a moving picture, this, isn't it? And we all need to play our part, but we also need to be clear where there are gaps and where we can fill those. And I think we should also be honest that, you know, they're not easy things to grapple with, these, are they? So tackling financial exclusion involves grappling with issues around risk, around cross-subsidy and fairness. It raises issues about where are the boundaries between social policy, between regulation, and what it's fair to ask the market to do versus what government should be taking responsibility for. And of course, none of those are easy questions, and sometimes they get put in the too hard box and therefore just get left. So that's one of the reasons we've supported the call to give the FCA a statutory must-have regard to financial inclusion objective. And for me, another one is that we think it would build on the positive progress there's been. I've talked a little bit about that. But also, even, Sheldon rightly sets out the intellectual arguments why that's problematic. I think when we think about how we can pragmatically tackle these issues, for me, one of the cases for this is that it would ensure that there's an annual report to Parliament put together by the FCA. I think that would add weight and focus and reach to this work. And I think it would give all of us a place to congregate and to move it forward. So for me, whilst I accept Sheldon's, you absolutely nail the intellectual arguments, I think in terms of being pragmatic, that would move things on. Whether the FCA ends up having a dedicated objective or not, we're going to have to continue to work together on these issues, because the challenge isn't going away anytime soon. I think that's probably enough from me. I'm keen that we use the time to get into the debate, so I'll stop there. Thank you very much, Chris and all.
Well, thanks, Joanna. It gets us off to a good start. Shall we move on to Martin Coppack?
Hello, everybody. So Martin Coppack here at Fair by Design. We exist to eliminate the poverty premium, the extra costs poor people pay for essential services. Now, that equates to 14 weeks of grocery shopping for a person in poverty in terms of what extra they spend on essential services. I also wanted to say that Fair by Design, we were at Toynbee Hall, Sean's here, to ensure that people who lived the experience of poverty tell us about what the world is like, the real world is like, and what solutions look like. I'm going to start off with an example, first of all, just to bring to light what it's like as a consumer representative trying to ensure people in poverty and their needs are represented and actually actioned on when it comes to financial inclusion and the poverty premium. For the last 3 years, we've been trying to get traction on the fact that poorer people pay around about £300 more for car insurance, a compulsory insurance product, simply because of where they can afford to live. We will go to the Treasury. The Treasury will say, well, you need to prove market failure. You need to have the data. Go to the trade bodies. You can't prove market failure as a small consumer type organisation. And I'll say, well, can you help us? And they say they don't have to. go back to the Treasury. The Treasury says, well, you really need that data before we will act. Go to the FCA. Go to the FCA and they say, well, you're talking about pricing of risk. That's not really what we do. Can you go back to the Treasury? And then we'll get sent to the Equality Human Rights Commission. They will say, we don't have access to the data. Go back to the FCA. We'll then try the Competition and Markets Authority. They say, we don't have access to the data. You have to go back to the FCA. Go back to the FCA and ask for a meeting in the room at the same time with the Treasury, multiple meetings, and each saying to the other, we can't move because of this conundrum. That is what it's like for consumer representative organisations trying to make a difference for people in poverty. And I've been working in the field now for 20 years. The financial regulatory framework is the best opportunity I can ever remember to make a systemic change to how the needs of people in poverty are addressed by social policymakers and regulators. The must-have regard will not make the FCA do any social policy. What it will do, though, is ensure that when they do new activities, or when consumer organisations come to them and say, please, please, can you actually break this catch-22 situation? Please, can you help us? They will have a remit to do it. I spent many years at the FCA. I created its work on the consumer vulnerability, and I also tried to fill this gap between social policymakers and regulators. And I remember the conversations internally. Look, Martin, we have to prioritise. We have to prioritise. We don't have a remit of financial inclusion, so we will not do this. We need to break this. It's not social policy. It's purely ensuring that the regulator gets the information. Interestingly, the Treasury Select Committee has already asked the FCA to get data on insurance, one of the big poverty premium areas. And the FCA said, actually, we are able, we have the capability, and basically by law, the only organisation who can get it. However, later changed their mind and publicly said they wouldn't do it because it's not within their remit. Something needs to change here. And this goes across other areas, whether it's payment methods or whether it's credit. The issue we're struggling with too is the great risk transfer. We are increasingly asking people to take responsibility for themselves and their family. Look to the market to protect your needs and your financial services. But what if the market doesn't want you? We have to realise that firms make rational decisions about who they serve, and they prefer to serve the healthy and the wealthy across their financial services. It's just a fact. But if we are asking markets which are amoral to provide essential services, we are then asking them to make moral decisions. So in that, we need to have a regulator and social policy framework that reflects that. And it's almost always around matters of calculation of risk. And almost always the trickiest issues and the issues that regulators regularly most struggle with are those issues which include some type of cross-subsidisation. And I really struggle to understand the government's current line, and potentially the FCA's current line, that the consumer duty and vulnerability guidance will look at cross-subsidisation. I'm trying really hard, I'm hopeful, but I cannot see that in any of the information provided. The loyalty premium was a great example that I think Sheldon mentioned earlier. The loyalty premium was known for years and years. It took citizens' advice to create a super complaint, sent it to the Competition and Markets Authority, who then directed the FCA to do something. But everybody now says it's a huge success. That took about 10 years. We all knew about it, and the FCA definitely didn't know about it. Access to cash and branches. Sean Williams, since year dot, has been working on access to branches, access to cash, but also around bank accounts. And Sean could tell you for a long time she was battling between the FSA and the Treasury to get something done that before it happened. Poverty premium in general, the Competition and Markets Authority spent ages looking at how to work on the poverty premium, but said in the end, we cannot do it. It has to go back to sector regulators. So round and round we go. And just one final thing, you'll see on the Financial Inclusion Commission's website and Fair by Design's website, a letter with over 70 organisations saying, this is a good idea. We need to break this catch-22 situation. Thank you.
Thanks, Martin. Characteristically, passionate and articulate presentation of the case. Thank you. I'm going to hand over to John Godfrey now, who's then also, after a short introduction of his own, is going to chair the discussion. And I hope Sheldon will feel able to come back in as well as others. Over to you, John.
Well, thank you very much, Chris. I mean, it might strike people on the call as a little bit odd that I, as someone working for a financial services provider, would also be very supportive of the idea that Joanna has just articulated, which is to have regard for the regulator around financial inclusion with an annual report. So this becomes public. And there are several reasons why, as a firm, as a provider, this feels like the right way to go. And first of all, we absolutely see that times are hard and becoming harder, and financial inclusion is going to become more important than ever. And I particularly like Sheldon's point about the cushioned, the squeezed, and the struggling. These issues are most apparent with the struggling, but the cost of living crisis is affecting people, quite a way up the income distribution, and we do need to be very careful that people in this sort of second, third, fourth deciles don't risk becoming financially excluded and making poor decisions because there is no remit really to protect them against that. The problem we have with regulation, and a good example of that is something we may see, and this may be more for TPR than FCA, Sheldon, but we may see people cancelling pensions in order to meet their monthly bills at some point down the track, and that for some people could be a particularly poor decision. So we need to avoid those people becoming financially excluded. Part of the cause, of course, is the lack of guidance and advice. It's very difficult for firms to give advice, and so firms concentrate right at the very top end of the market for fear, really, of subsequent litigation. And that, in a way, is sort of symptomatic about one of the paradoxes of regulation, that it happens ex post, not ex ante. And one of the reasons I like the idea of the have regard is to create a principle up front. And firms will pay attention to that principle if it exists, because it's an absolute fact of life, if you're in the industry, that the regulator not only has hard powers to intervene, to redress wrongs done to existing consumers and so on, but it also has soft power to provide leadership and to provide direction. And I think a firm would be particularly ill-advised to argue against this on the grounds that it goes beyond the current vires of the regulator. So I think there is space to do that. And Sheldon, you are sort of doing some of it already. And I thought the examples you gave of policy shifts and therefore initiatives where the regulator is playing a part were very strong. The access to cash legislation, the insurance cross-subsidy, caps on credit costs, and encouragement of innovation and so on. They're all good things of themselves, but they need to sit within a framework. And I think the have regard around financial inclusion could provide just such a framework. Again, from an industry perspective, there have been there's a lot of head scratching around what might the consumer duty look like. There was some slightly panicked head scratching about what it might look like if it came with a private right of action. Would that result in huge amounts of litigation? I think we're in a more sensible space now. And the absence of that sort of invitation to litigate creates a gap where we can move ahead of regulatory change and frame it in the context of financial inclusion. So I think this is with the direction of travel. I think the industry will be supportive if there is a duty or a have regard created here, much as the industry for the almost entirely has been supportive around initiatives for vulnerable customers. So it's another step on the way, and I'll stop there because like others, I want to hear what people on the call think about this idea. But I think, Chris, before doing that, I have to call on Heidi to put up another poll question to see how we've moved along in the last hour. So Heidi, are you there?
Fingers on the buzzers, everybody. So should the FCA be required to consider the impact of its consumer-related activity on inclusion? Just give you a few minutes to answer this. Okay, just a couple more seconds. There's a few more that I need to press, but we've got the majority of you. So I will end the poll now and I will share it for you. There you go.
Well, that is quite striking, isn't it? 95% on the first question and 96% on the slightly more focused second question. We are, of course, a slightly self-selecting group of people, so in one way, perhaps not entirely surprising. But I think if you went out to, for example, the industry, you would get still a pretty high score on both of those questions. So we now move to the sort of open session, the panel discussion, and I think to get the most out of my fellow panelists and everybody else, I think we should start with some questions from participants on the call, and I will try and see who's got hands up. Is that no? That's not a hand up, but. Do anybody put a hand up to start us off? Otherwise, I will pick on somebody. I'm going to exercise my right of picking. Oh, Sean has got a hand up. Right, you jumped in there under the wire.
I always come to the rescue. I always come to the rescue. I actually want to throw a question out, if I may, John, to the audience. That 4% who have voted I don't know, wouldn't it be great to hear from them? Because if 96% of us think yes to this, it could be a really great conversation about how we agree with each other. I'd love for any of those people, if they felt comfortable, either to pop in the chat or to ask or to say what it is that they're not sure about, because it's that we really kind of need to understand, isn't it? It's just a thought.
So would anybody like to articulate a no or a don't know position on this? Well, perhaps if anybody would like to put it in the chat, that would be fine too. I will go therefore to Sheldon first, if I may. And Sheldon, the three of us have articulated a case, hopefully from slightly different viewpoints, consumers, firms, and broader policy. Sheldon, do any of those points sort of make it easier for you to argue the case for a have regard?
So I think that look, they're all points well made, and as I said in my speech, I do think it's a matter for government and for Parliament as to how our objectives work. So I'll do the pros and cons. Maybe I'll cover some of the don't knows. I think the pros certainly are that you can place, as you put very well, John, you can place the activity within a framework. You can set out some of the principles that you might adopt in relation to financial inclusion and put those out for public comment and then get feedback and then decide how you would work in a financial inclusion space. So that could be a pro. But we could do that now. So the points which Martin is sort of making about the past, I hope, Martin, that you see the present, that there has been somewhat of a shift in terms of our approach to some of these issues. And I think we were already pre-working on the, maybe not at pace, but we were certainly working on the loyalty penalties issues prior to the citizens' advice super complaint. Quite a lot of work was going on in relation to it prior to that. So I think we could set out a framework in terms of how we see financial inclusion presenting in our work. Another pro might be the points around the legal challenge. So if we did that, and if we were very clear, if we were ambitious in that space, would that bring us closer to the edges of our boundaries and therefore lead into legal challenge? I am a lawyer by background, but I wasn't really a black letter lawyer. So I'd probably say there's always risk in terms of what we do, and I think one can push the boundaries. But a have regard might put one on a surer footing in relation to the legal challenge. I just caution, though, that the law is not immutable. So just because you have a have regard doesn't mean that you can extensively have social policy initiatives through a regulator, even with a have regard. So you still face into human rights challenges in terms of the right to property and other challenges, even within that context of having a have regard. So the limits of what we can do would still be bounded by other laws and other ways of acting. I think the cons, from a very from one perspective, is that you have a range of different have regards, and balancing those can be difficult and sometimes can lead to conflict and challenges in different directions. And then I think a further con relates to, I suppose, in one sense, if we did frame that around and we had a clear series and pattern of work that we would take place, then that needs to be funded. So I think you would see a genuine increase in the levy on firms in order to fund something around this piece of work in an annual report, etc. I don't think those costs would be exponential, but there are costs in the system of putting that there. To be fair, though, we will need to think about some of the costs of bringing into play the competitiveness objective as well, and whatever other new objectives that we have. And there are lots of costs in terms of bringing on the files from Brussels in the post-Brexit environment as well. So I've listened and I hear, and I think there are good arguments in favour, and I think there are arguments against, and I think it's a debate which is well made. What we will do for sure as the FCA is, as that goes through Parliament, we will, in a very sort of even-handed way, try to assist and help with with people thinking about the language of such a have regard in case it goes through, because obviously the language of that will be very important. And I also think if one was to push it forward, we might need to think about what the existing language in the competition and consumer protection objectives look like to make sure that the regime as a whole is coherent. But that might be a level of detail not for this discussion.
Thanks very much, Sheldon. Just on costs, I think everybody in the industry expects that to happen as a result of simply the burden of work. And specifically for financial inclusion, if this were to result in not just more inclusion, but also more engagement by customers with financial services, that would be something the industry would welcome. Now, I know, Martin, you wanted to come back on Sheldon's comments, and after that, Natasha de Teran, I think you've got a hand up, if I'm right. Martin first, and then Natasha.
Thanks very much. Sheldon, I agree with you in terms of a must-have regard wouldn't allow the FCA to start delivering social policy type initiatives. However, what it would allow you to do is consider the needs of the lowest incomes and access to certain products and services at the heart of your initiatives. So thinking back to the work, the good work the FCA has done around pricing and general insurance, the one thing that was out of scope was the bit which mattered most to people in poverty, and that's pricing of risk. Without that must-have regard, the FCA could continually say we will not look into this, and without that information, Treasury will not move, and we know that from years of experience here. The other bit around more priorities, I get that. Add another must-have regard, that's another thing the FCA needs to do. But I guess I would argue, working with the likes of Tommy Hall and working with people in poverty, the cost of getting the absolute basics right for the people in the most poverty in the UK is probably a good priority and a good spend of money for the regulator. Thank you.
Thanks, Martin. Natasha, I think you've still got a hand up. Do you want to come in now?
Hello, yes, thank you. I know this is a sort of national discussion because we're just dealing with a national problem, but I wonder if it serves us to think about the international dimension. And I know that the UK is, I think, fairly constitutionally averse to importing regulation, but quite constitutionally inclined to export it. And if we do want to have influence on the world stage and a regulatory perspective, and yet not address financial inclusion, I just wonder where that positions us, given that it is such a big problem globally, including in many of the places to which we'd probably like to export our regulatory influence. I just wonder if we're not setting the example at home, if we're not curing a very significant problem at home, which is perhaps even more significant in many other geographies, to what extent our ideas are valid. So I just thought that would be worth throwing in there.
Well, that's a terrific and interesting point. Can this be a sort of feather in our cap in terms of exporting regulatory best practice? Coming to fellow panelists, Joanna, I wondered if you might have a view either on that specific point or on this question of whether all parts of the financial system would broadly subscribe to a have regard as long as it worked well.
Thank you, and I think that Natasha makes a really good point, and one that we should think carefully about. In terms of whether everybody would support it, I don't suppose everybody would support it. I think that there is, though, a tide, because the experiences, we've heard it today, haven't we, of the people with the lowest incomes, but also people at higher up the income spectrum who are now starting to struggle, means that there is a broader appreciation of what is an extraordinary time for everybody. So I think that puts more focus and sheds more light on this area. I think too, I would in terms of what Sheldon said, which makes perfect sense, but I'd take you back, Sheldon, to what you said right at the beginning. You talked about the regulator's duty as being making markets work well. And it's an obvious point, isn't it? But who is that market working well for? And I think we need to focus on that point. And to add to another point you made, which was about stubbornly sticky issues. And you're right about that. And we've heard from Martin and Sean and others about how long and hard people have toiled, including the FCA, including the Treasury, including many of the people around this table. And, we've made some progress, but we still have big outstanding issues that we haven't solved. So it's time to try something new. Perhaps it would add a small element to cost. I think it's worth it in the extraordinary circumstances we're in. Thanks.
Thanks, Joanna. I'll come back to you in a minute, Sheldon, once we've had a few more contributions and you can pick up on those. I think Emma Hyde, you had a sort of deferred question from the last session. So do you want to launch it now?
Yeah, I'm not sure how it exactly fits into this discussion, but I just wanted to share some reflections from the Christian Against Poverty perspective on Sheldon's point around how to reach people in certain communities. And yeah, at CAP, we definitely support providing non-digital means to try and help people who are digitally excluded. And a lot of our clients face this issue. And we also support accessible communication to people in a range of situations. But I just wanted to make the point as well that even if people do have access to the right financial knowledge and even the right financial skills, this still doesn't take away the external factors such as unlivable income.
I'm not sure if it's just at my end or if other people.
No, I think MMA are frozen there. MMA are frozen there, unfortunately. So I have to come back to Emma when she's back on screen.
Yeah, Heidi, if you could just message Emma and say we've sort of lost the sound, but we will come back to her if the connectivity improves. And I think the point about digital and non-digital and digital exclusion is a perfect segue to Bailey Cursor, who is, of course, a highly digital person. So what's your view, Bailey, on that? Was that what you wanted to say, or did you have something else altogether that you wanted to throw in?
Yeah, great segue. So I just wanted to say, as someone who's worked in fintech for a long time, over a decade, I definitely agree with most of the points made and overwhelmingly support this idea for have regard. But I was really curious to hear from the panel, and maybe even from Sheldon, not to put him on the spot, around what thoughts are around how this potential have regard would impact decisions around innovation, because innovation was a theme from Sheldon's speech, things like the FCA sandbox, leading the way in new types of technology and regulating new types of tech. And I'd love to hear kind of whether there are barriers, I suppose, perceived barriers to implementing this have regard from the perspective of it might limit potential innovation, or whether that's not something that is factored into the decision or into people's thinking. That was my question.
Well, speaking as a panelist, Bailey, I don't think it would do that at all. In fact, I think you might see innovative ideas emerging around how to improve inclusion. So I think it's consistent. Martin and then Joanna, do you share that view, or does Bailey raise a sort of concern that is legitimate here?
So my experience with regards to fintech is, at present, fintech is used as a reason not to intervene by different people such as Treasury, social policy makers, Treasury, and potentially the FCA in terms of concentration on innovation. However, I get wheeled out to so many hackathons or tech sprints or whatever you want to call it, fintech type events. And they say, Martin, come and represent different types of consumers and present your problem. I will present the poverty premium problem, and they go, well, that's not really the one we want to look at. Yeah. Because what you're talking about is people who we can't make much money from. I get it. But I'm not going to go to many more of these hackathons and just repeat myself and be told that's not the problem we want to solve. We have to realize with innovation, you still got to make a profit. And the biggest issue is some people you just can't make much of a profit on. You might be able to play a little bit with cost to serve, but for the biggest issues so far, it's not working. And I should say, we have a venture fund, Fair by Design, a different part of our program, and we put money into new initiatives that design at the poverty premium. Slim pickings, I'll tell you that much. Thank you.
No, and I just want to come back on that. Totally 100% agree. I'm more thinking of it because I'm not a policymaker or a regulator from that side. And I wonder, is one of the thinking from the regulator that by introducing this into potential new regulation that they're going to put forward, potentially then going to make it harder for new companies to come to market, because absolutely the point that you're making, Martin, is there's no commercial incentive for those kinds of businesses to exist, which fundamentally, like how might this have regard influence that? You know, that's the kind of question. And I wondered, I really don't know. I don't have a view, so I'd love to kind of just hear if it does.
I'm happy to respond to that question. I mean, I think my plain answer would be no. I think Teresa's put it well in the sidebar that as regulators we balance sometimes, I think sadly, lots of different objectives, have regards, letters from ministers, etc. It's our bread and butter. I say sadly because sometimes that can mean that you balance out at the margins what that have regard or objective was intending you to do. But I think the way that Parliament and public policy thinks is that if you bring all of that together, then you get to a more holistic and sensible solution to a problem. I don't think that having a have regard in relation to financial inclusion would impact innovation, which flows sometimes through our competition objective. And I've given this some thought. I think for two reasons. One, because the market which is seeking to serve those customers who are financially excluded is sometimes different from the market which serves, you know, other customers. If you look at credit, for instance, lots of people are de-risked out of accessing credit, and there's a different market in terms of high cost credit and other types of suppliers which serve those customers. So I just can't see how it would impact innovation. So I think I don't think that would be a major issue for me. On the positive side, it might create, you know, I think we already do this, but it might, you know, create more impetus to get innovation in relation to these sorts of issues, to counter Martin's point about the people going after profit. I think, Martin, on your point in relation to those hackathons, for me, technology, for me, I think about financial inclusion. I think there's local initiatives and community-based initiatives, and then there are initiatives at scale. How can you best find real scalable solutions to some really big challenges for those who are financially excluded? And those are issues around education, financial capabilities, I said that in my speech, big ticket items. I mean, if you could get everybody into a bank account, get everybody using or supported into digital and into open banking, I think you could find more opportunities to use that tool in order to solve some financial inclusion issues. That's not the only way, though. There's lots of other ways as well. But I think sometimes it's about what are the barriers to allowing technology and innovation to flourish for all, not just a few.
I just come in there because I
Joanna,
think,
yes.
yeah, thanks. I think I just heard Sheldon say, correct me if I'm misquoting you, Sheldon, that you could see the argument for this have regard to increasing the potential of the fintech sector, which, you know, is fantastic, it's world leading. We have it here in London and the UK. Not just tackling the issues for those of us who can, you know, afford an Apple Watch or whatever, but actually for everybody in the population. And I think if that's right, that is really very, very positive indeed. I mean, my colleagues on the UK Finance Board are, I'm sure, sick to death of me saying that with digital exclusion as well as financial exclusion, we collectively have a huge responsibility to bring people with us, because there's a polarizing impact of technology, which means that the most vulnerable are continuing to experience the most exclusion, and we have to bring those things together. So I think that was a really positive discussion. Thank you, Bailey, for the question, and I think that this is a reason for I have regard to. Thank you.
Well, I mean, Joanna, what I'd say is that it's a reason for, and it's also a reason that you don't need one. I mean, we do lots of work with digital inclusion with the banks and with other sectors now, and we do that through our new consumer duty. So, I mean, I'm agnostic on the have regard, because I do think it's a matter for Parliament and for government. And my experience of getting involved in these have regard discussions in the past have made me more cautious, to be perfectly honest. So across all sorts of have regard. So I'm agnostic. I think there are arguments for and against. Obviously, that could be an argument, as I've expressed, in a way that could be a for. But I would say that innovators do try to tackle financial inclusion issues. It's not easy when there's no profit necessarily flowing from it. And the risks that we see is that there was an outfit called Tully, which tried to do debt advice digitally. And then eventually, I don't know what happened with its business model, but it doesn't do that debt advice service. It could be something around the digital aspect of it, but it now partners with partner organizations in order to deal with specific debt issues. And I presume it gets its commission and funding through those partnerships. Now you can see the challenge there for that business of how it can make money, because there's a cost of providing that sort of service. But they went through our regulatory sandbox. And I think it's really good to see that type of organization feeling its way through how you can get digital to work in the debt advice space. And we try to create a space for people to go on that journey. I'm afraid the future is digital. Before we know, we'll do debt advice in the metaverse, in the multiverse, whatever. I just think we have to do both of those things. They are not, from an FCA perspective, I can't speak for others, but I do have to counter this, Martin. They are not a smokescreen for dealing with financial inclusion issues in no way, shape or form. The two are independent, interdependent things that we do.
Thanks very much, Sheldon. Now, Emma, I think, is back online. So if you want to resume from where we lost you, that would be great. And after that, I'll come to Howard Taylor, who's patiently got a hand up. Emma.
I do feel that the conversation's moved on a little bit, so I don't want to take away from this discussion on the must-have regard.
Okay, well, feel free to jump back in, when the time feels right.
Will do. Thank you.
Howard, over to you.
I guess I've been listening and reflecting to the discussion, and I had a couple of observations. One was that I think we need to separate out between financial inclusion/exclusion and digital inclusion/exclusion. I'm a massive advocate that digital can drive financial inclusion and that technology can support everybody in society. But I think we actually need to tackle the problems separately and accept that both problems probably need an omni-channel-esque solution where you've got social policy, government, and others coming together to bring that human aspect to some of the technology decisions. And there's obviously a question of ethics if you decide that the only route forward is digital. So I think that you need to have, while society's going more digital, and that is the future, I completely agree with Sheldon, I think you also need to accept that there's going to need to be a balance to get the best out of digital and also to drive greater inclusion, not just financially, but more broadly as well, because I think financial inclusion is related to other forms of inclusion and it's difficult to separate the two out. The other point I would make, that within the group of the financially excluded, there are multiple groups of people, some of whom actually benefit massively from technology, of which I would say I was one personally, and I know that's something that those who know me on this call know, that without the technology I had access to, there is no way I would have been educated or be here talking to you today. So I think we need to be a bit more granular when we decide what the causes of exclusion are. And I think the have regard would help drive a broader debate on how we make the UK more inclusive, because finance is the one thing that sort of gets people's minds focused.
Thanks, Howard. Sian, I think is that a new hand?
Yes,
please.
Go for it. And I want to build on what Howard has said. I think this point around digital and financial inclusion and exclusion is really important. Howard, you talk so well there about the kind of granularity of it, and I think that is really the kind of the key. So at the moment, I'm doing a review of digital payments exclusion for the Cash Action Group work, and have looked at digital payments and digital tools over the last decade and what people need. And if we focus in for a moment on the subset of people who are financially excluded, who are also digitally excluded, primarily around two drivers: income and education. So when Howard's speaking there, we're kind of thinking too about people maybe who are on a higher income level, living with, for example, disabilities, where digital can be incredibly powerful as long as there are all the support structures in place and access to that technology. And when we then look at, for example, people who have grown up in a low income household with probably in a kind of highly deprived area, then you kind of get these multiple factors around lack of access to technology at home, lack of access to technology in school, and potentially then going into a workforce where they have lack of access to technology. And a piece of research we did many years ago for the Payments Council, as was, really looked at people's pathways through life and how it wasn't necessarily your age or your kind of your mindset. It was really about what access to technology you'd had throughout different stages of your life. And when you take, for example, a post delivery person, so old language, a postman, a postman in the 1960s had no access to technology. A postman today walks around on their route with a handheld computer that they're using. And so when you think about how we're changing work and how we're changing access to technology, it's really important. But then if you go to those people who are out of work, particularly grown up in a low income household in a highly deprived area, really the only access people are getting to technology there is when they're asked to go and do their universal credit diary and apply, and they haven't got the tools and they haven't got the toolkit. When we talk to financial services firms and we talk to customers, what we hear all the time is, be more patient with me. So customers are saying, number one, design products and services that actually meet my needs. And so, for example, direct debits are terrible for people on low, unpredictable, insecure income. But the request to pay option that we've developed is really powerful for people on low income or insecure or unpredictable incomes. But the industry is not bringing in request to pay. So have regard to around financial inclusion would give the regulator the chance to say to the industry as a whole, we can see that this tool would be really powerful around helping people shift to digital payments away from cash. What will it take to make it happen? How do we help you? And also, we want to see your action on this, your action plan. At the moment, there's no one holding the industry to account on bringing these kinds of tools in. And that's why we're so convinced that a have regard to is a really powerful tool. The final point I want to make on this is working on the action cash, the access to cash work, and through the community hubs and the community bank pilots, we've really pushed to go for supported access to cash. And what we mean by that is we're totally agnostic about cash. It's just that cash currently is still the best tool for people on tight margins, because digital tools don't give them the penny by penny control that they need. But what we'd really like to see is digital payment tools and digital banking tools give people real-time budgets, real-time balances, real-time payments, control over recurring payments in a way they don't currently have. If you put all those things in place and you gave people, kind of 3-month support to move from cash to real-time digital payments, we could get many more people moving away from cash. But that requires two things. It requires the firms to give them the tools, and it requires the frontline staff to have the support and the permission to help people migrate over a long period of time. We don't have that in place, but we think the FCA can help us get there, and that's why we want you to have regard to financial inclusion.
Thanks very much, Sean. There's a powerful example about request to pay, I think. Martin, Joanna, do you want to come back on some of the points we've just heard? And then I'd like to try and move the discussion along a little bit. Sheldon mentioned Parliament and the importance of what is decided there for this agenda. And I wondered if I could ask Chris Pond, sadly no longer in Parliament, I wish he was, but maybe a sense of whether there is a sort of rising tide of support there. Unfortunately, Claire Tyler has had to leave us, but Chris may be close enough to be able to give us a sense. But first of all, Martin and Joanna, anything just to sum up on the points we've heard so far?
I mean, just for me to say, I don't think I've got much more to add other than to say what a rich discussion, what a huge list of positive points to move this discussion forward. It's fantastic that you're capturing it at Financial Inclusion Commission, and I do feel like this event is really moving us on. Thank you.
I agree with Joanna.
Good. That's excellent. Very succinct, Martin. Thank you. Chris, what's the political temperature, do you think, on this?
Well, I'm obviously not as close as people like Claire are, or Sima Malhotra, another of our commissioners from the Labour side, who are there on a daily basis. But certainly, if you look at the debates around this, and I referred to the debate that took place last Wednesday, which was led by Claire, you had support for this proposal, this specific proposal from Claire herself, but also from Lord Holmes from the Conservative side, and from Labour contributions. So across the board, in the Lords debate, there was support for this. I think that's also reflected in what's happening in the Commons, both in the debates, normally Westminster Hall type debates, not necessarily on the main floor of the chamber, and also in the all-party parliamentary groups. There is a general sense that in the context of the cost of living crisis that people are facing, we have to use all the levers that are available. And some of those are policy levers, i.e. government responsibility. Some of those are the practical operational levers, if you like, the sort of work that people on this discussion have been doing at the front line, whether it's helping people deal with debt or to manage their money more effectively. But also a sense that, there is a regulatory lever, which is as yet partly unpulled. Although, as I say, because the FCA has been doing so much on this, that it's more a case of clarifying just where the perimeter lies than asking the FCA to do still more. And I think, Sheldon, you mentioned that, the fact that it might give you protection from legal challenge were that perimeter to be more clearly defined and to give you that have regard. But I think, John, in answer to your question, I have met with very little resistance from parliamentarians, and I know that Martin and Sean and others have been talking to parliamentarians as well. We're not getting the pushback to say this doesn't make sense. There is a feeling that we have to do everything that's possible to help people, meet the cost of living crisis. And I think this is just another lever that can be pulled.
No, thanks, Chris. That's very helpful. I see Martin has just put something in the chat saying the Treasury Select Committee seem to be seriously considering this idea. I'm going to go now to another really interesting point from the chat, which is from Teresa, who says levelling up agenda ? Could you try and unpack that? Should this be directly hooked back to the levelling up agenda, or is that trying to draw the line too widely for levelling up, Teresa? It's an interesting idea.
Well, I don't know if I can unpack any of the policy programmes of the most left-wing Conservative government we've ever seen. But I think that the levelling up agenda is very area-based, and a lot of the the financial inclusion-oriented financial services are very geographically area-based, as well as communities of interest and experience through particularly credit unions. That work in particular sectors, but they're very strongly place-based. And levelling up is quite place-based, particularly governments allocated provisionally money for councils and around the country to be able to draw down for initiatives in their area that address levelling up issues. And it would seem to me, I mean, I've been around this debate for a really long time too, but you know, we used to hear about things like underserved markets, which were understanding and promoting the market potential of people living in particular places, as a way of addressing financial exclusion. And I'd have thought there is some potential to hook these issues, these aspirations, into the levelling up debate. There are some Conservative ministers who've set up community banks and know about some of the issues. So I don't think that's unpacking it. It's just a thought of how you tie something to an agenda which is running across government.
Yeah, and maybe some local pilots. Martin, I think you wanted to come in on this.
Thank you so much, Teresa, for lining that up. Fair by Design is launching an interactive map next month, where with Bristol University, we have calculated the poverty premium to a local MP constituency level. And you can hover over the map, and it talks about how many million is being paid by constituents. But also it will break down the types of poverty premium in each area. What's really interesting is how the former Red Wall seats sit in terms of the poverty premium. And we're getting quite a lot of interest in this, even though we have not launched it yet. But what we're also doing is tying it to research that shows that people in poverty spend more in their local areas. So even if you halve the poverty premium in a local area, so much million would go back to people, put it back into their pockets. And also the recommendations we're coming up with are cost neutral for the Treasury. So that's coming up, hopefully 22nd of June. We're still trying to sort it out. But I think that'll really add some links towards the levelling up agenda, but especially around the cost of living.
That'll be really something to look forward to, that map. I think it'll be fascinating, Martin. Now, Natasha, I'm not sure if yours is a new hand or a legacy hand.
Sorry, it's a legacy hand. I will take it down.
Okay, not to worry at all. So, listening, I think, very patiently to the debate so far, the president of the Financial Inclusion Commission, Brian Pomeroy, himself, the driver of many kind of government interactions and successful campaigns. Brian, did you want to throw something into the discussion at this point?
Well, I just seconding those who said it's been an excellent discussion. Only to say, much of it has centred on the must-have regard, which I think will be clear, strongly supported by the Commission, really helpful, I think, to hear others support it. The only point I really add, and it has been made, is that with all the good intentions of the regulator and of the industry, what the must-have regard would do is put a structure around it. It would be a structure around collecting information and publishing it, and hopefully also some structure about the channel of communications, which, as Sheldon so rightly says, is necessary between government, the regulator, and civil society. Some sort of structure which would make sure that things happen and don't fall through the cracks, which one's tempted to say could happen if there is no reasonably formal structure, such as the have regard would give us. So that's the only comment I would make. But otherwise, just congratulate everyone on their contributions. An excellent debate. And I think it genuinely has taken thinking forward, and indeed, hopefully, a bit of the consensus forward a little bit further than it was at 9 o'clock this morning.
No, that's fantastic. Thank you, Brian. And I'll go back to Sheldon, I think, at this point. And you know, the question is exactly the sort of question that you might expect from someone who's involved in the insurance industry. And it is, you know, we all want this have regard on this call, I think, and you've said you're agnostic about it. Now, if for parliamentary reasons or any other reason we end up not having it, is there in your mind, Sheldon, a good workaround to deliver at least some of the benefits of it without the actual piece in statute itself?
Yes, I mean, I haven't given that any thought, but I think there are 2 or 3 ways in which you give regulators instruction, for want of a better word. One is through their high-level statutory objectives. So we've got competition, market integrity, and consumer protection. The other is these have regards. And then the third is what remit we get in terms of remit letters. So currently we have a remit letter which sets out our need to think about moving towards net zero, which John, you and I discuss in other settings. So we have that. So you can also have governments give remit letters to regulators on specific sorts of issues. So I think there's that. I think in addition to that, there's also, you know, the way in which, I'm trying to remember who described it, whether it was Sean or someone else. It was Joanna actually, was talking about markets for all, and also other people talk about underserved markets. I do think that there is an obligation on us, given our own existing statutory framework, to be clear about ourselves about that perimeter, and also to be clear about our role and approach in issues of financial inclusion. And if you stop talking about financial inclusion and social policy and merely talk about how are these markets serving all of UK customers, then you can see implicit in the framework that we need to think about these issues and set out what we are either doing or not doing about them, and have that open to public scrutiny. So I do think that the existing framework, and I'm genuinely agnostic on pros and cons at the moment from an official perspective, I do think the existing framework does set out that we need to explain how markets work well for all UK customers. We don't just serve, how did I used to put it when I worked for the CMA? We're not a Waitrose regulator. We're a regulator which serves all. And most of my existence when I was young was going into places like Iceland, Woolworths, and looking for the cheapest cuts of meat and so on, because we didn't have money, and we all basically knew that we had to count to the last penny when we got to the till. And I know there are people up and down the country who are doing that now, and that worries me like it worries all of you. So there is, I can't solve that problem, obviously, but the FCA needs to set out what it is doing in relation to the fact patterns and evidence that we see running through society, and we will do that.
It's so encouraging, Sheldon, that you are kind of with us in spirit and on this, and I think there is more work for the FIC to do on, you know, what might be the practical ways to achieve what we want to achieve. Joanna, I think you wanted to come in at this point.
Yeah, just really to welcome everything that Sheldon has said there. So it's so encouraging to hear that. I mean, we did some work with Martin and others earlier this year, and actually last year too, around inclusive design, because, you know, we all live in a bubble, don't we? However much we try to break out of that, and we talk to people like us and so on and so on. And it really is only by designing products and services, working with real people with lived experience, that we can cut through that bubble. So it was great to have many of your input into that work, and the FCA was interested, and John Glenn was interested, and so on. And it's clearly only one aspect of this whole debate and issue, but whether or not there is a have regard to, the way that products and services are designed and marketed and so on is so important to the people those markets are serving. And just to kind of nail that point, that working with people with lived experience, whoever we are, whatever our organisation is absolutely key. Thank you.
Fantastic. And Martin, a strong view on that? I'm guessing that you will have.
just to say thanks for bringing that up, Joanna, and it was a pleasure to work with Money Advice Trust on that. Totally agree around inclusive design for products and services, and what's really interesting, and we're grateful that the FSA actually pointed to our publication for firms on inclusive design within the vulnerability guidance. But I think the one thing that we need to remember about inclusive design, when it comes to firms using it, the one area they won't touch is the poverty premium, because that's about cross-subsidization and it's around design for people you can't make a profit from. And that's why, with Joanna and Money Advice Trust, we created the toolkit for regulators. And it'd be absolutely fantastic if the FCA would like to do a bit more work on that. We're working, Fair by Design is working with Toynbee Hall at the moment and Ofgem to bring people with lived experience into the room and talking about a just transition to net zero with members of staff of Ofgem, but the offers there for the FCA too. Thank you.
No, it is indeed excellent work on inclusive design. That's terrific, Martin. So I think what I'd like to do is offer the floor briefly to Kevin Ennis of UK Finance. Again, a slightly different perspective, perhaps. How can your members play a part in this? Do they want to join us on this mission?
Let me unmute myself. John, I think it's been an excellent morning. Thanks to all the contributors. Yes, I think the industry are well behind these initiatives, and I think serving customers, it's almost like someone mentioned the other day, it's almost like the industry getting back to greater contact with every customer. We've got to balance that against lack of branch access, lack of contact. But I think the direction of travel is very much in understanding the needs of more individual customers. And as Martin's put right, thinking about all customers.
Yeah, I agree from an industry perspective. An engaged customer is a better customer. It's as simple as that, really, isn't it? So I think we're sort of almost at the end of the session. So I'm not sure, Sheldon, if you wanted to make any kind of closing remarks for this bit before I
well, I do.
I would just say, Sheldon, we are so fortunate to have you and that you stayed with us throughout all this. You're a very busy man, and so we are deeply grateful. But if you wanted to sort of wind up this part of the proceedings, then I'll hand back to Chris.
Yeah, well, I just thank you very much for having me. I mean, I was intending to give the speech and then walk off, but my team very clearly knew that I would very much want to participate fully and kept my diary clear, which is so well done to my team. Thank you very much. I have learned during this conversation, I think it's been a really free and open and a working conversation, which has gone into detail. And there's a few things which I've direct messaged a few people on to follow up on, Jean, with the points around digital payment journeys and Innovate K in relation to Community Reinvestment Act thoughts from the US and a few others. And I think it's only by having conversations like these, tried to say that having this level of communication that we can solve some of the challenges that we see. I won't say anything about the have regard. I think that's a welcome debate, and it's important that that you continue that debate and the work that you're doing, and let's see how Parliament responds to that. My final point would be that I will be arranging a cost of living crisis roundtable with consumer and other organisations, and when we do that, I will reach out to some of you, so please do come along to that. I think it's important that we try and see if there are specific issues that we can do to alleviate some of the pressures for many people up and down the country as we move forward into the coming months and hopefully not years, but it could be. Thank you very much for having me.
Well, thank you, and Chris, over to you now.
Well, thanks very much, John. And can I just underline your thanks to Sheldon for not only giving up the time today and for those very thoughtful and incisive responses, but also for the work that you are doing. And we do recognise that in terms of challenging consumer detriment, addressing issues of vulnerability, and indeed extending access, that you're on the side of the angels on these things, and we're really pleased to have you where you are in such a forthright position within the FCA. And thank you again for this morning. Thank you also, John, for chairing that discussion and for your contributions, and to Joanna and Martin as well, and for all of you. At one stage, I think we had over 100. We dropped down to, I think we've now still got 56, but after 2.5 hours, that's not bad. And you have shared with us your expertise. Not everybody was able to speak or wanted particularly to speak, but we will have Sheldon's speech published by the FCA, I assume, on the website, Sheldon. We will capture what has gone into the chat, because there's been a very rich discussion in there, and we'll make sure that that's available for anyone who wants to see it. And could I say also that we've got another couple of these sessions coming up, not specifically on this issue, but we have got one coming up on insurance in July, which we will circulate the date on as soon as possible. And then later on in the year, probably in the autumn, we are running a session on financial education, specifically focused on schools, but also thinking about education throughout life, which we're doing jointly with Money and Pension Service and UK Finance. And we are hoping that Martin Lewis may be able to address us on that. So I hope all of you will stay in touch with us. We have seen that there is almost universal support for this idea. I have to say, I think I can probably guess that there were those three people who said they didn't know whether this was a good idea, might have included somebody who's described himself as agnostic throughout this discussion. But there is a lot of support for the idea, and I hope we'll all stay in touch with each other and make sure that we can move this forward and get the message across to the parliamentarians, because Sheldon and his team really do need that support from Parliament to say, yeah, do what you're doing and do more of what you're doing, and we will be protective in terms of any potential legal challenges you might face, but that has to come from government and Parliament. So thank you all for your time this morning. And I go back to Heidi to say thank you to you, Heidi, for organising a really successful event. And you will be organising the other events that I mentioned coming up. And all of us will know, therefore, that if we invest the time, it will be well used because of the way that Heidi has organised things. So thanks to all of you. Let's stay in touch and enjoy the rest of the day. Thank you.
Thank you.